traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. So just put together the bias chart. Let's put together the bias chart. I just pulled that up, and let's go over to the standby. All right, little turkey. I don't know what my little guard dog is doing next to my feet. He's growling at somebody, and I have no idea who it is. All right, let's take the euro dollar. And here we are. Yeah, how often do you hear that, huh? A lot from my office. Okay, so here's the euro. And so the euro on Friday, we held the move down to 108.50. Okay, real strong support in the euro. And we bounced off of that support. Once following the jobs report, we sold off, rallied back, ended up near our highs. The euro was just starting to give some of that back until Stanley Fischer, talked, and so the euro just bounced back. You can see here's this nice rally from the 20s. We rallied back up to the 50s. I'm assuming we're going to find some resistance up here. You can see intraday struggling around the 109.80 level. Here's the hourly. So I'm going to make the assumption that's about a 50% retracement from the high to low, and it takes us right back to mid-range. So knowing what we know out of the markets, it seems likely to me that we'll actually take out this resistance briefly, even if, it seems briefly, that we will at least do it just enough to probably stop out a few traders. So if you go from high to low, and why did I stop here? Let's see. Okay. The 50% retracement comes in at 109, well, 109.80. So we have resistance here, 109.85 again. And that's probably going to be decent resistance for us today. If we get above that 110.10, which we talked about last week, and I don't know if you remember this conversation from Friday, I said if I get an opportunity to sell it at 110.10, and remember Friday we drew this out, so we were here, okay, and if you don't recall, we were talking about following the jobs report. If we get a rally to 110.10, I'd love to be on the short side up here. Do you guys remember that conversation? Well, guess what? I don't think today is any different. If we get a rally to 110.10, I'm a seller. I'll get on the short side of the euro up there. All right, so let's mark down 108, or excuse me, 109.85, 110.10, 1.0985, 110.10. Okay, bias range. Yes, we are. So where's support? I mean, obviously support's down here at 108.50, but I guess the question is it realistic to believe that we'll even make it down there today? I would think not, personally. I really don't think that we'll make it down towards this support level. Here's your daily chart. But hey, maybe we do. It's an upward sloping trend line. Maybe we do make a move back down to 108.70. I really just don't think we make it all the way down there, though. I'm thinking it's highly unlikely, but let's just see. Let's say we peaked here. Let's say this is the high. So I mean, do we even dip down to 109? I think if we dip down to 109, that's probably going to offer us some support. If for some reason we do this today, like let's say Lockhart speaks and Lockhart's a little bit more hawkish, maybe the euro does give it back, but 109 should support us pretty well. I think today. By the way, if I sound a little tired today, I am. I've got I'm tired because we've actually had a really busy weekend. My kids start school in 2 days, and my and my my kids starting school. I mean, we've been running around like crazy, picking up like uniform stuff and school supplies. And if you have kids, we didn't this year, which is silly. The schools that we go to, it's maybe different what country you're in or what state you live in here in the United States. We have the option of usually buying a package of like you know the schools will say, okay, these are the supplies you need. You need like three ring binder, pencils. Blah. You end up spending a couple $100 in buying school supplies, but you run around. It's like a treasure hunt all over town. We'd spend our whole weekend doing that. Or sometimes the schools say, or you can pay $200 and you buy the whole. We'll basically buy the supplies for you. We'll buy everything you need, and usually we do that. But this year, since both of our kids are starting at new schools, um, we didn't have that information in time, and we found out late that our kids got accepted to the schools that we wanted, so we had to do it ourselves. So been running around like a crazy chicken for the last I don't know, for the last couple of days. So if I sound a little worn out, that's the reason why. It really has been. I'm like excited to get my kids to school. Like please be done with summer. Okay, here's the cable, and we bounced actually off of really critical support on Friday. Now I'm holding a short pound dollar short, and I have it's not a huge position, but I'm short at right at the trend line. Well, close to. I mean, 104, 154.55. So I'm literally short. My average is like right here, but I didn't add to it, and I'm considering adding to it, but not at current levels. Again, I'll reiterate, I'm short the cable. I'm short the cable because I think last Thursday was a very bearish event for the pound. I really do. I think that the MPC was not as hawkish as the market wanted, and I think that's going to weigh on the cable going into this week. Now, right now, I am wrong because we have held this trend line and we're holding it this far, and that low from last week comes in at 154 and a quarter. That's really, really, really important support. And I'm going to write that down here this morning. 154.25 is major support. If for some reason, like let's just say the dollar turns and let's say Lockhart says something that just totally puts a fire underneath the dollar and the dollar starts to rally. If the cable drops to 154 and a quarter, I'm going to reevaluate if I really want to be short if we hold. But ultimately, I want to be short anyway, so it doesn't matter. If we get a rally back up into resistance, I would be a seller. Okay, I really would. I even if I get out of my short pound position today, I will re-enter short the cable over the next day or two. Does that make sense? I'd rather find a better price. I just feel like I got a poor price down here being short near the support. Okay. That was my fault on my entry, but I'm not worried about it because the overarching theme behind the cable is to be, is I believe that the MPC is extremely dovish. And even if you don't want to be short the pound dollar, being short the pound something makes sense to me. Okay. Whether it's short pound Aussie, short pound New Zealand, short pound Canadian, long euro pound, being short the cable something it makes sense. Like on Thursday and Friday, I was long the euro pound. I made 50 pips, and that currency pays more than 1 to 1. It pays like 1 to 1.5. It was a really, really good trade. I made a pretty good chunk of change on Thursday and Friday being long the euro pound. Um, so I've got in my mind, I've got room to wiggle with my pound short that I'm short now because I made a lot of money being long the euro pound on Thursday and Friday. So it's like even though I'm down a little bit, I feel like I'm playing with house money regarding the cable. So, but I feel that eventually we're going to break this yellow line. The question that I have right now is, do we rally first, then break, or do we break, soon? You know what I mean? It doesn't. That's my only question is, do we break now or do we bounce and then make a run for it? I have a feeling that we're going to be doing this first. Okay, that's if you want my gut instinct, that's what I feel. Does that mean I want to get out of the cable right at this moment in time? No, not necessarily. I mean, I might. I'll stick around regardless. But what I would like to do is if we get a rally back in the cable, maybe back up towards this 155.50, this would probably be a good place to add to existing shorts somewhere around here. Somewhere around there. It might even be like right here. Somewhere in this would I would consider this the sell zone right through here. Okay. So if we, rally back towards 155.50, I'd love to be a seller up here. I just don't know if we're going to get all the way back up there. That's the question. Are we or aren't we? I don't know. But that I feel would be a good area to be on the short side of the cable. So 155.50, 155.50. And we are still very much in a range in the pound. So don't disregard the fact that we are really range bound in the cable at the moment. Um, a lot of this bullishness right here when the euro was going down, the only reason why we held up here is because everybody was holding out for last Thursday, thinking the MPC was going to be, bullish. But, obviously based on the votes and some of Carney's comments and the market really shifting the thought process that they're gonna raise rates going into 2016 rather than this year should keep the downside pressure on the cable. Okay, let's go over to the Swissy. Now the Swissy, we came really close on Friday to the 99 cent level. And I don't know if this is it. I was thinking about it on Friday after the fact, and I was thinking, oh, shoot, Blake, I should have, instead of waiting for 99 cents, I should have just let some of my dollar Swiss go post non-farm payroll on Friday when we got to this 99.80, because you guys know I've been targeting 99 cents for a while. Okay, why am I targeting 99 cents? Because there's a few different reasons. First of all, and I think it was Daryl, and I may be mistaken here, who said that, about this trend line, back in 2001 to this peak from a few months back to that peak to where we're currently at. I mean, it all intersects and it all comes in right around where we're currently at, 99 cents. Then we have also this channel top here. Let's go to the 4-hour chart. We have this channel that we're working, 99 cents. Also, you take the high from right here in March to the low in May. The 786 comes in at 99 cents. So we got like triple confluence right there. So we have really major resistance that we're facing in the dollar Swiss as we approach 99 cents. The question that I'm wondering is, well, because I think we're going to break eventually, but I'm wondering if I should take some profits when we get up there. So, and then you can see this horizontal resistance that also comes into play right around this 98.50. That's another issue right here. that we're facing. Okay. So, here we are right in a resistance. There's so much confluence up here. So anyway, 99 cents is going to be big resistance if we make a run there. Now, one of the things that could take us up to 99 cents, by the way, and we're still bullish. Um, if you guys haven't seen it yet, I'm long the Euro Swiss. I've been sitting in this for a long time. But do you guys see this move? Not that one. Right here. 88.10 or 1088.10, 108.10. You see that? Question is, if we take out this 108, 108.10 level, if we take that out, does that start tripping stops and the Swiss franc really comes under pressure? Because I think if there's a currency that can really affect the Swiss franc, the dollar Swiss, it's the Euro Swiss. The Euro Swiss probably does more. There's more volume behind the Euro Swiss than there is in the dollar Swiss itself. Okay, so the fact of the matter is, if we trip stops above this 108.10, that could really propel the dollar Swiss higher. That's something that, you can see these measured moves are the same right through here. But if we break it, because we're picking up some nice steam going into this number, that might trip stops above 108.10, which would take the dollar Swiss, which could take the dollar Swiss to spike high into 109, is what I'm thinking. Okay, so anyway, there's the dollar Swiss resistance, the support, and you'll notice the thing about the Swissy is right now the dips are very shallow. Do you see that? Any dip that the dollar Swiss gets, it just bought right up again. So as long as we hang out above 98 cents, it's bullish. Matter of fact, it's still bullish even if it dips below 98 cents, but 98 cents is support today. Okay. All right. Let's go over to the dollar yen. So the dollar yen, okay, it has been very strong, and we've had a nice bounce back in the dollar yen. I'm not trading any yen pairs. No, I take that back. I'm short the Swiss yen, but um, here's the dollar yen, and let's actually remove this really quick. You can see 125 as resistance here. Now, bonds are down today, and you can see here, like, there's the 10-year. 10 years having it's down quite a bit, and that means yields are going up, and when yields go up, dollar yen tends to go higher too. And so we've had this really nice bounce back from 124 back up to close to 125. The thing is the dollar yen has been extremely resilient. I hadn't expected the dollar yen to go up quite like it has, but the thing is with the dollar yen is it's holding up very, very well, and as long as risk appetite doesn't completely fall through the floor, I think the dollar yen has a good chance of taking out these highs at 125.80. But for right now, 125 is resistance. You can see obviously 124 is good support, and I think that a break above or below will really tell us what the next move is. So if if you're looking at the dollar yen here, I think you can just say, well, uh, a move below those lows or a move above these highs, and that'll really set the pace of where the dollar yen's going to go from here. And I mean, I don't know. I just don't know where, which way it's going to go, but I think I'll let the dollar yen do the talking for me rather than me trying to make the assumption on which way it's going to go. There's obviously, you want to short the Aussie yen because it's near 92 yen. It even is today. excuse me, euro yen moves up to 137, 138 are probably good shorts. But how about if the dollar yen breaks through 125 here? Do you really want to be on the short side of the euro yen and the Aussie yen if the dollar yen breaks through 125? I don't. I wouldn't. So 124 is support, 125 resistance, and we're range bound for now. Okay. Okay, let's go over the Canadian. The dollar Canadian. You know, I forget who it was that was saying, hey, hey Blake, is that a head and shoulder pattern? I'm like, that's kind of a stumpy neck. I always like more prominent heads if I'm going to trade a head and shoulder pattern. We got a little bit of a dip on Friday. I bought that dip. I'm such a bozo because I bought at like on Friday 130 like 90 something. Then I added to it at 130.50. My cost average was like 130.62 or 130.65, right where I wanted to buy it, because you guys know that 130.65 is a monthly breakout point. So my cost average ended up being right at the breakout point pretty much. And then I got out of it at 130.82. I made like 15 pips on Friday. I bought this dip, sold it, or is it? No, no, no. Yeah, I bought this dip here, sold it like here, and I could have made a truckload of money. Then it dipped again, and I didn't buy it on the second time around. I just said, it's too late on a Friday for me to do anything. And so anyway, but I guess the point I'm trying to make here is this 130. If you get an opportunity to buy it at 130.60, you got to take advantage of that if we get it again. And the question: are we gonna get it again? And I don't know. I will tell you that is key resistance. So I'll go with that. And that comes in at let's just say today's highs are 131.80. So that is pretty key resistance. 1.3180. We are still bullish here. Nothing's changed from not being bullish. And then, where do we dip to? How far do we dip here? Spike low, spike high. Maybe a dip down to 131 would be a great opportunity to be on the long side today. If we do this. All right, when I come back, we're going to do the Aussie, the Kiwi, dollar index. We'll take a quick look at the, peso, Nordic currency, see what they're up to. Sweden had some data out last night as well. So I'll be back in a few moments. Don't go anywhere. Thanks. All right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. So let's wrap up like the Antipodean currencies here and dollar index. Look at everything else. Okay, so here is the Kiwi. I'm really not too sure what to do with the New Zealand dollar at the moment. I mean, we're obviously nearing some very, very major monthly support. So if you look at like a monthly chart, okay, we're sitting here at 65 cents, or obviously 80 pips above it. We have a monthly 618 that comes into play there. If you look at the 50% retracement, that comes in fairly close, around 64 cents, which means that if we ever break 65 cents, the 64 cents should offer really, really major support. I saw a chart, and I can't remember who had sent out this chart regarding the S&P versus some of these some of these commodities, like maybe it's the CRB index, and we might end up getting an inverse relationship if equities come down, the CRB might actually start to bounce. It was just something I saw, and I can't remember where I saw it at. I'm gonna have to go, dig that chart up myself, but and put it together myself. But I saw it somewhere. I just can't recall where. But the fact is that we're holding really critical support at 65 cents for now, even as bearish as commodities have been. So the question is, how big of a bounce are we going to get in, like the Kiwi, for example? Are we going to be able to get a break above 67 and a quarter, or 67.50 or whatever this high is here? And I don't know. Right now, as far as right now goes, we have lower highs, even though we're trying to break out of this downtrend line. Okay, we still have lower highs, which I've seen this before. We saw it recently in gold over the last year, where gold broke a downtrend line, but what it ended up doing is that it ended up, instead of making a big reversal, which I think a lot of people are expecting, what had happened in gold, if you don't recall, gold broke a trend line just like the Kiwi is doing, and the Kiwi did it back over here too. If we had another trend line that it kind of broke, what it ended up doing is building a wedge and then eventually broke lower. That's what happened with gold, if you don't recall, over the last year. Well, I can't actually rule that out with the Kiwi either. It's because I have no reason to buy the Kiwi dollar. That's the reason why I believe that. It's like the only thing that tells me to buy the Kiwi dollar is technically we're finding support, but other than that, I have no way to really justify being long the Kiwi dollar per se. Like, oh, well, I want to be long the Kiwi dollar because the RBNZ is all gonna probably start turning hawkish from here. I can't see that, especially with the Chinese data as weak as it is. The RBNZ has given us indication that they're done cutting rates. Oh, well, then I should definitely be long the Kiwi. I can't justify being on the long side of the New Zealand dollar, especially over the dollar. Now, buying the Kiwi over other currencies, that's a different story. But for the dollar, I really can't justify that. But that doesn't mean that it won't happen. I'm just saying that if I can't justify it, if I can't justify the fundamental reasons to be long or short a currency, it makes it more difficult for me to do so. Okay. So anyway, looking at the New Zealand dollar, so that high matters because that is at 66.40 is the 618. We spiked as high as 66.36, so 66.40 is key resistance today. Now, if you ask me, it looks like dips are very well supported. Okay. And probably down to 65.50 is going to be very well supported as well. So I still think that we're in a bearish trend, though. If we stop making lower highs, okay, I'll probably change my tune. But right now, it's lower highs. Okay, consistent lows, lower highs, which is actually a bearish wedge. So as long as we continue to make lower highs, I'm not going to be excited about a turnaround in the Kiwi. Not yet. All right, let's go over to the Aussie. Aussie is very similar to the Kiwi. In a sense, it's like, okay, well, look, on Friday we broke this downtrend line. Then if you were turning bullish the Aussie, well, that Chinese data basically threw you for a loop. Let me take that out. And you know, push us right back down again. So, what a ultimately what a pain in the rear end this has been, with the Aussie dollar, because just when you think it's breaking a downtrend line, it turns around on you. So it's obviously sucking longs in, and we're still making lower highs. You can see this, lower highs, right? So, now any rally back towards 74, probably 74.10, is going to offer resistance, just like the Kiwi, it's making lower highs. So 74.10 is probably going to offer a great place to be on the short side of the Aussie. Still in a very bearish trend until we start, printing some higher highs or higher lows. And then um, looks like support is right here at 73.50. And we're near that support. It's not great support, but it is support. Okay. Let's go to mm, let's go to the dollar index. Okay. What happened here? Did Not too sure what happened with my dollar index here. Hold on really quick. Um, you know what I'm gonna have to do while I'm on break? I remember I logged out for some reason, and I don't have my information saved here. During the next break, I'm gonna have to go figure out my username and password. I forgot I did this on Friday because I was fiddling around with something. Okay. Well, with that being said, I'm going to skip the dollar index this morning anyway. Let's go over to the peso. I'll figure that out by the time we're finished here. Here's the peso, and let's see if we can find anything going on with the peso. So, okay, I was thinking post jobs report on Friday, we would get some sort of move because we were mid range and we still are. Let me get rid of that. But take a look at the hourlies now. Looks like we're consolidating pretty good here. And I don't trade the peso. I know some of you guys do. So that looks fairly important right here, which means that the peso is probably pretty close to giving us a break out of this triangle, which is good. Decent consolidation break. Um, She's doing it inside of a really strong channel. I don't think there's anything too exciting to do with the peso though at the moment. Let's take a look at the Swedish krona, or the Norwegian krona and the Swedish krona. So here's the Norwegian krona. With the bouncing crude, you got to be a little careful here. This Norwegian krona could have given us a false breakout the last couple of days. So, and crude oil is trying to, I mean, look, we're actually trying to get a bounce in crude right now. So this could easily pull us right back down towards support. So if you're trading the Norwegian krona, just be a little careful. I don't think there's anything really to do at the moment, but just watch if this support gets taken out. If for some reason we lose that support, that's going to be a pretty bearish event for the Norwegian krona. And let's go to the Swedish krona. Now, Swedish krona, I think industrial production, let me double check that. Industrial production came in worse than expected. So that pushed the US dollar Swedish krona up towards resistance. Now, that's all fine and dandy, except we're right up against major resistance. So we're going to have to write that down, 8.87. And here's the thing. If you guys want, this is for those of you that can trade it, and I can't trade it, so I'm not going to be doing anything here. But why wouldn't you get on the short side here, right? And if you're wrong and it breaks above here, you know that we're going, we're gone. Okay. But if you're also a dollar bull and you're like, well, I don't want to do that because I'm bullish the dollar, well then fine. You need to wait until we break. When or if we break out, this is going to be really bullish, or maybe even buying a dip back down to 867. Okay, so support in the U.S. dollar Swedish krona, 8.67, and resistance is whatever the high is here, 8.87. And that's major resistance. And we're starting to turn bullish here with the U.S. dollar Swedish krona. I mean, we're coming out of this flag. So, like I said, if you want to, if you're bearish to the dollar, this is a really good opportunity for you to be on the short side. Not saying that it's going to work out. I'm just saying there's not much of a better opportunity from a risk reward standpoint. Now, I happen to be a dollar bull, so even if I could trade this U.S. dollar Swedish krona on the short side, I doubt I would do it. But if you are a dollar bear, you're not going to get much of a better risk reward to short the dollar right here. Because if you're wrong, you can be wrong early. You can take a little bit of a loss, and then it's going to rip higher, and you can just turn turn that into a bullish trade if you want. Okay, so here's your bias chart, and like I said, I'm gonna have to deal with my dollar index a little bit later. I'll deal with that when I get back, when I take a break. Let me see if I can take some questions. Wow, hasn't been a